So, okay, in a prior video, we did the bank reconciliation for holder company. And so now we're going to go through and do the adjusting journal entries that we need. And like I said in the prior journal entry, when you do your adjusting journal entries, you're only going to focus on the book side because that's our side of the bank reconciliation. This side over here, the bank side, that's the bank's problem, right? The deposits and transits and the outstanding checks, like we discussed in the prior video, are just timing differences. Eventually, they'll clear the bank and it won't be an issue. The bank error, the bank will record on their books. So when you reach a problem and it says record the adjusting journal entries for this bank reconciliation, you'll see the bank reconciliation and then you'll have a spot to record your journal entries. You're only going to focus on the book adjustments. Those are the things that we need to do to bring our cash balance from what we thought it should be to what it actually should be after the bank reconciliation. So the first thing we're going to do is we're going to go through and we're going to record all the things that are going to increase our cash, right? And when we're increasing cash, cash is an asset, and so we know we need to debit all of those. You could do all of these in one journal entry if you wanted to, but because this is accounting 211 and we're not quite to that point, I'm going to record them as separate journal entries. So the first thing we had, if you remember, was a collection of a note. The bank collected a note receivable for us that had been outstanding for a long time. We turned it over to collections and they collected it for us. They collected the $6,750 of the note and $45 worth of interest. So we need to come down here to our journal entries and we need to, I think it was May, this was a journal entry, a bank reconciliation for May. So we would be recording these on May 31st. Okay. And the first thing we're going to do is we're going to debit cash because this is going to increase our cash. The bank deposited this into our account. We need to, excuse me, we need to get rid of the notes receivable. The customer has now paid and notes receivable is an asset. So in order to decrease that, we are going to credit it because in order to decrease an asset, you have to credit it. And the note itself was only for $6,750. Then we had $45 with the interest that we earned. So that's going to be interest earned or interest revenue, whatever your chart of accounts says. And that was $45. Okay, so that's going to record this one. Depositor's error. Remember we recorded a check for the wrong amount. We had written a check for, I think it was $1,485 or something like that, and we recorded it for $1,500 and some dollars. Anyway, it was an $81 difference. And again, you're going to record that on the last day of the month. And again, we're increasing cash, and so cash is an asset. In order to increase it, we have to debit it. And when we originally recorded it, it was for office supplies. So we are going to reduce the office supplies expense. And in order to reduce an expense account, you have to credit it. And then we had interest that we earned. The bank deposited $450 into our account for the balance that we had for the month. We earned some interest. And so again, our cash is going to be increased. It is an asset, so it has to be debited. And interest revenue or interest earned, however your account is specified. And don't worry that some of these are bolded and some of them are not. It's not a big deal. So that takes care of all of our additions. Anything that's in the addition column, you should be debiting cash because that's always going to increase your cash account. Then we're going to go down here to these deductions. The deductions are going to reduce your cash account, so you're always going to be crediting cash. And remember, when you're preparing journal entries, your debited accounts always come first, and then your credited account. So cash will always be our credit in this case, so it should always be our second account. Sorry, I couldn't think of what I wanted to say. All right, so the first thing we have to record is the bank fee, the bank service charge that we had for $18. So that's going to be an expense. In order to increase an expense account, we have to debit it. So it's going to be bank fees expense or bank service charge expense. You have to look at your chart of accounts to see what your particular company calls that. And then we're going to reduce cash, right? So that's got to be credited since it's an asset. And then we had that non-sufficient funds check that came through. Mr. Petty had written us a check for his accounts receivable. that now we found out the check wasn't any good. So now we have to put, excuse me, we had to put that accounts receivable back on the books, and we have to reduce our cash. Both of those are assets. So in order to put that accounts receivable back on the books, since it's an asset, we have to debit it. And we're going to put Mr. Petty's name beside it so that we know that that account receivable goes with him. I think in my open math, you would only have to do accounts receivable, not the customer's name. And then we got to reduce our cash because that amount was taken back out of our account by the bank. Okay, and if you were doing these in your accounting software, if you were working for a company and you were the bookkeeper or the accountant, you would also put some descriptions in there so that anybody coming in behind you would know what the journal entries represented. Okay, so then that's everything. We've recorded the collection, we recorded the office supply error that we made, we recorded the interest, we recorded the service charge, the bank charges, and we put that accounts receivable back on the books. And again, we'll have to call Mr. Petty and tell him to bring us some money. And so then once all of these journal entries are recorded, our cash balance will then agree to the bank reconciliation, $53,821. Okay, so